stay with markets and let's talk about capital market plays. And Angel One is what we are talking about. It routinely now comes up as one of the top ideas when people talk about how to get exposure to this sort of, secular rise in retail market participation that we've seen. It's also seen as a mix between, sort of a consumer tech play. Dinesh Thakkar is chairman and managing director at the company. He's joining us now to talk to us about their performance and, of course, a little more than that as well. Dinesh, great to have you with us here. Good morning, Prashant this side, and thank you very much that you're able to make it on very short notice. So thanks.
Thank you. Thank you very much. My pleasure.
Dinesh, let's just start with, what did you see in terms of new client addition momentum and also order volume momentum at Angel in the quarter gone by? And how has it continued into the quarter that we are in so far? Go on.
See, last quarter was definitely historic because of many reasons. First, we had shifted from our traditional broking app to super app. So that created lots of kind of traction for new to market customer. And last quarter, we were able to add around 21 lakh new customers. And our total customer base has gone to around 1 crore 70 lakh, which is kind of a lifetime high. Our orders also grew by around, 50% year on year. So last quarter, we were able to clock number of orders were around 34 crores, which is again lifetime high. So what we are seeing is that there is a secular kind of rise in terms of new investors who are new to market and who wants a kind of an easy journey and access to market. That is where I think they are loving this approach of super app. And we are seeing that traction of customer acquisition continuing for even the rest of this kind of period what we are talking about. I feel that lots of people who have been not been given or not gotten proper access to equity market, and given the scenario where actually inflation is low and return on equity appears to be higher, corporate earning appears to be higher than inflation, lots of youth are showing interest to come to the market and try to explore possibility of how to make second income and how to create wealth out of this market.
Absolutely. Dinesh, hi, good morning and thanks for joining in. You've also had that early mover advantage, right, in this digital push in catering to the younger audience, especially in tier 2 and tier 3 cities. So kudos to you for that. You were telling us about how it's a 1.7 crore customer base now that you're sitting on, which is a lifetime high. But I want to understand from you whether this run rate that you've seen, the 60% sequential growth in new client additions, is it something that you can continue or is it just a one-off phase? And what is the kind of average growth that we're looking at in client acquisitions?
See, Sonia, I believe that we are in a market which is very underpenetrated, and especially as you rightly pointed out, when we shifted from traditional to digital, our focus was clear that we will target this set of users, not focus only on traders, but focus on tier 2, tier 3, try to create journey where they are able to have an access to market. So I believe this kind of run rate, what we are saying, it is because of low base of customer in the industry, I would say. So there is huge opportunity. If we look at people who are having PAN account and all that, it appears to be number is around in the tune of 65 crores. And today, if you look at active customer base, it is hardly to the tune of 3.5, 4 crores. So I think there is lots of opportunity for digital players to grow together.
Hi, Mr. Thakkar. Good morning. Nigel on this side. What about your market share? It's slowly been inching up, both in the F&O as well as on the cash average daily turnover. How do you see this number headed? You have gained a couple of percentage points in the last few months.
Yeah. So if you look at new client acquisition, we are at market share of around 22%. And if you look at active customer base, we are yet around a bit less than 15%. So these are lead indicators. If at all you have a good run rate in terms of new acquisition of customer, it takes time to bake the customer in and they understand journey, they understand market. So slowly, gradually, we will see increase in market share. Reason being because we are able to acquire more customer, new customer to the market. So I feel this kind of increase in market share is a bit logical. And if you look at customer addition, until the time we are able to gain market share in new client addition, I think this kind of like progression towards acquiring or getting more market share in turnover and all that will continue.
Dinesh, so bulk of the business for you is, of course, still broking as it is for others as well. But, you're trying to build it out, a third-party distribution, etc. Is the super app going to be, since it's already out there, what's the response like, and what will be the share of revenues from that line over a period of time, as you see it? What's the aim, at least?
Yeah. So currently, if you see that most of these revenues for all digital players who are into stock market comes from broking. And this year we introduced Super App. Reason was to introduce more services on our platform. So first what we introduced in April was mutual fund journey. So if you look at incremental SIP number that we have achieved last quarter, on terms of incremental SIPs that we have achieved, we are number 2 now. We achieved around 7,25,000 new SIP created on our platform. So focus is to be into multi-service area where we are able to fulfill the requirement of customer in terms of their all lifelong requirement for personal finance. So aim is to be a market leader in mutual fund, market leader in lending business, and we would be gradually introducing insurance businesses on our platform. So slowly we are moving towards introducing our own AMC and even wealth management thing. So it would be very difficult to say how this revenue is going to shift, because if you look at broking and all that, they are growing at a very decent rate. So to revenue mix to change, it will take some time.
Yeah. No, absolutely. So the core is firing well. But so you're saying that AIMS, you want to go into the AMC business as well?
Yes. So already we have applied for license. We have got in principle approval. And we are in the stage of already we have finalized for final approval. So we are expecting that this financial year end.
And do you want to go on the passive side, active side, or will it be a overall offering with both?
No, Prashant, we believe a right product for retail investor is ETFs and all that. So we would be on a passive side. Rest of this mutual fund, we are a distributor for all mutual funds. So we would not like to go on an active side.
And on the lending side, Dinesh, could you tell us your plans? Is it already started, or you will launch it?
Prashant, we are integrating our app with a few manufacturers and trying to fine-tune the journeys. We would be distributor in that area. We would not like to expose our own books for this. So I think by the end of this financial year, we would start lending to our customer base. Yeah,
and just as a kind of a target internally, where would you want all of these broking? What would you like the sort of number to be over? Because that also reduces. The broking business used to be cyclical. Hopefully, it is not anymore with client addition over the last couple of years being absolutely fantastic. But where would you like the non-broking revenues to be as a percentage of the total over a period of time?
See, over a period of time, if I take 5 to 7 years, we would like to see broking remaining in below 50% of our total revenue.
Below 50, okay. And that
below
is...
50.
Okay, all right, got it.
Okay, so broking to be below 50% of your total revenue, got it. You were telling us about various things, and I think this is important even from a shareholder standpoint, right? You're going to be introducing the insurance business on your platforms. You're going to introduce AMC and your own wealth management business as well. You have a new management on board. Ravi Sinha has taken over as the Chief Product and Technology Officer. Can you tell us what is the plan in mind over the next 12 months, apart from what you've spoken about so far, in terms of client acquisition, in terms of growth? What will he be bringing to the table?
Yeah, so he is a new CPTO that we have brought in because we have to work on quite a new architecture so that we are able to put multiple services on this app, where not cluttering too much of an app or not making it too crowded. So his main responsibility would be to look at new technologies and bring in kind of like new areas where we can increase our efficiency and keep our app simple. So he has a lots of experience. He has worked with Flipkart and Yahoo, and he's restructuring the whole thing so that it is aligned to every business needs, because now we are getting into multiple businesses, like we are dividing our broking, one into digital, second into assisted business, where we see big opportunities. So technological approach for both and product approach for both would be very different. And plus we are adding mutual fund and wealth management services and trying to build a lending platform on the same platform. So it requires quite a kind of like creative thought process in terms of how do we look at our tech stack.
Absolutely, and I think that is the need of the hour, right? To make your digital presence stronger. And I'm glad you're doing that. I'm sure your shareholders would like it as well. Just coming back to the core numbers, in Q2, your cost to net income has improved sequentially. I think right now it is standing at somewhere around 50% plus. Is this something that you can improve upon further over the next couple of quarters?
In every quarterly, I have told that we are not looking at cost efficiency currently. We are looking at spending on technology and improving experience of customer. As we are getting into new verticals, we have to take lots of cost on that side. So revenue from that will come later. It's an upfronted cost that we take. So we like to maintain this margin at 50%. We would not look at cost efficiency at this juncture, where actually we are looking at growth from other businesses.
All right, Dinesh, we'll leave it at that. All the best and congratulations once again on a strong set of numbers and the growth path that you have charted out for yourself. A big beneficiary of the improvement that we've seen in the equity cult as well, Angel One, sitting with growth of around 2% odd. Let's slip into a quick break. On the other side, Dhruv Shringi.